Hello and welcome to Market News. Let me turn attention to India now, Mr. Puri. We've seen one agency after the other cutting the economic growth prospects of this country. The government, on the other hand, still seems to believe that 5.5% is what we're going to end up with. On the Indian macros, what is your own view?
Well, I think some of the differences that we're seeing in the growth forecasts are probably somewhat technical and driven by the way people actually compute these numbers. But putting that aside, I think it's quite clear that the numbers have been downwards in terms of revisions over the past year. So the overall direction has been consistent, and everybody, including the government, has actually been revising numbers downwards. In terms of trying to keep spirits up, it's not surprising that the government will do its best to highlight some of the underlying positives, and some of these are real. I think one that has been talked about is the prospect of some signs of an agricultural-led recovery on the back of a good monsoon. I think that helps. I think the fact that gold imports have dropped sharply, I think they're down to just over $500 million in August from 5 or 6 billion in the months before that. I think that's a very positive sign again for the short-term stability of our current account. I think we have seen the first signs of exports picking up, which is what you'd expect to see with the rupee depreciating as much as it has done. So I think there is some room to believe that sounding a little more positive perhaps than we were 3 months ago is warranted. And I would expect the government to actually play its role in lifting animal spirits, if you like, in that regard. Nevertheless, this is well below our potential, and it is rather unfortunate that we're having to have a discussion about managing downside risks when really we should have been in a position about capturing the true potential of the economy had we actually played our cards a little better over the last few years. Because we ultimately, in order to create jobs, as you know, we do need growth rates of above 8% to be sustained. And I think that remains a significant underlying challenge that we're not addressing at this point.
Hello and welcome to Market News.